It's absolutely a gem, and one of those rare projects that doesn't have a major or an intermediate as a partner. We've done metallurgical test work here. We're getting well over 80% recoveries from column tests. We have power line, we have road access, and we have water access. All very important to reconstructing this heap leach. There's a lot of synergy around these operations in terms of our people, our expertise, and the type of mining that we're talking about. The exploration potential here is outstanding. At depth, the deposit's open. To the north, the deposit's open. And to the south, we've outlined over 5 kilometers of strike, and our geologists are itching to get back in and do some drilling here. That takes us up to about 150,000 ounces a year gold production from heap leach assets. So these are the relatively straightforward open pit heap leach processing scenarios. You know, we have the possibility to double our underlying NAV with that PEA.
Alright, today we're having a discussion with Hugh Agro, the CEO of Revival Gold, a gold mining explorer and developer who is currently advancing 2 different heap leach operations as we speak. Now, before we talk about all that and more, Hugh, thank you so much for swinging by on the channel. Welcome. Perhaps we can start off with a short and sweet high-level overview from your side.
Thanks, Stan. Great to be with you. Really happy to be talking to your audience. Revival Gold is a developer of gold projects in the Western United States. We are publicly listed in Canada on the Venture Exchange and on the OTC market in the US. Market cap is about 60 million Canadian dollars. So we're trading today at about $6 an ounce in the ground with some 6.2 million ounces in the company, and progressing towards free cash flow from our brownfield sites in the Western United States.
Great overview there, Hugh. Thank you. And so many threads we have to pull on, but first your Mercur project, which I believe is your newest project. Perhaps you can take us along. What is this one all about? What is already there? And what do you plan to do with it over the next couple of years?
Thank you. This is a project we acquired about a year ago from a private company. This is a classic 12-year overnight success. The people that put this land position together come from Beartrack, and they assembled this land position because we're on one of the big Carlin-type deposits which are so prolific in the United States. It's a 6,200 hectare land position. We acquired it for shares, and we immediately set ourselves to work doing metallurgical testing and advancing a preliminary economic assessment. We've got 1.6 million ounces of resource pictured in the bottom corner of this slide here, and we're about an hour's drive from the city of Salt Lake. This is an excellent location, not only from a point of view of proximity to a large commercial center, but also because of the infrastructure. This is a past producing site, proven past producing site with over 3 million ounces of gold produced. We have power line, we have road access, and we have water access, all very important to reconstructing this heap leach project. And we're working away now on this preliminary economic assessment in which we expect to be pointing to 80 to 100,000 ounces of gold production per year as we advance engineering and into permitting. We'll have the results out from that preliminary economic assessment in about 2 months' time. And so lots of happening here with our Mercur project in Utah.
Great, Hugh, and thanks for that overview. We'll dive into that development story in just a second. You already started hinting at it, of course. Your resource, first and foremost, 1.6 million ounces, like you described, at about 0.57 grams a ton. Now that's low to mid-grade for mines across the world. Perhaps you can talk us through what that looks like actually with exploration potential. I know you have some higher grade pockets, for example, on slide 13, where you're getting some higher grade intercepts. Should we expect that lower to mid grade for the resource when you start exploring more? How should we think about this?
Yeah, the way to think about this is how much value is in each ton of rock, and the value in each ton of rock is a function of the grade, but also the cost associated with getting it out of the ground. And what's so good about this project is it's a heap leach project with very high recoveries. I alluded to the fact that we've done metallurgical test work here. We're getting well over 80% recoveries from column tests, and that points to very good extractions. And as well, this is an open pit scenario, so surface mining. And again, we have lots of data around this because this is a past producing site. Very profitable operation in the past for Barrick Gold, and so we know that the process and the mining will work, and that means lower risk. So on an all-in basis, we think this is going to be a nicely profitable potential operation for Revival Gold. There is really exciting exploration potential, including the last hole drilled by the company from which we bought this project, some 26 meters of 6 grams per ton gold, all within open pit mining depth. So lots of interesting targets on this project to continue to expand the resource, and the grade as it currently stands with high recoveries from heap leach mining and open pit make this a pretty tantalizing situation.
Great. And as past producer, is there any leftover infrastructure that you're able to capitalize on that they've left behind for you to, like I said, capitalize on?
Yes, indeed. Power line to site, paved road to site, office building, water within reach. And again, I can't emphasize enough the fact that the claim position that we own here is quite large, and the main core of it around the current resource is all on private land. So this is really important from a timeline to free cash flow point of view, and we're working away on that now.
Great, and perhaps we can talk about timelines to free cash flow. Of course, you're doing your PEA currently. We're expecting those results in about 2 months, like you outlined. How should we view this project into the next couple of years?
Yeah, I think we're going to be able to move relatively quickly here. We'll have the detailed timelines for permitting and all the steps and the costs required, along with that preliminary economic assessment. But from what we see right now, this should not take us more than 3 years to get through the steps required for permitting and to be in a position to turn a shovel for construction. We've got some more engineering work to do, some more test work to do, but the key steps are obvious in front of us, fairly well defined. Again, given the past history of this as a producing mine, we don't have a lot of unknowns. We don't have a lot of unknowns about community support. We don't have a lot of unknowns about the technical performance of the rock in processing and in mining. And we don't have a lot of unknowns about where we're going to find people to operate this site. We're an hour from Salt Lake City, but we're even closer to a town of about 40,000 people, blue-collar town, which would really be supportive of jobs and the economic benefits that come from a potential operation restart here.
Great. Thank you for that overview there. And perhaps we can talk about ownership. You spoke about that most of this land, especially around where you would like to start open pit mining, is private. Is the project in 100% ownership of you, and is there any royalties on the project?
I'll start with the end question first. There are royalties, averages about 2% NSR on the current resource to various different property owners, but we have not written any streams or third-party royalties on this property, which gives us some interesting options for potential financing. But in terms of the property position, it's been put together through various different option arrangements with a number of different parties, starting in the first instance with the west Mercur side of this property, which was put together by the former Beartrack VP Exploration North America because of his vision for the down dip potential in the anticline of this Carlin type deposit. The next step in sort of putting this property position together was to bring in the former producing Beartrack mine itself, which is on the east side of the property, the northeast side of the property, and then finally a southern block of land which was originally developed by Homestake and was acquired from a group known as Priority Minerals. So none of this land position had been together in one set of hands until just recently and our acquisition of that property. And we do have some outstanding payments to make, option payments, nothing that's material beyond a $5 million payment to Barrick Gold next year, and the rest of it coming out of production. So it's a pretty nice package of land. It's the first time that it's been assembled in one set of hands. It's the entirety of this Carlin type deposit. There are some pieces that we think are pretty exciting in terms of exploration, obviously in outlying areas, and may lead to some additional potential beyond the property position we currently have. Of course, Bingham Canyon, the big copper gold mine, is not far from us. Again, on the way to Salt Lake City, which is one of America's largest copper gold producers, and then we've got some other projects in this Ophir Mountain range. So lots of potential for mineral discovery beyond our existing property position. But when we talk about the Mercur project, it's absolutely a gem, and one of those rare projects that doesn't have a major or an intermediate as a partner or as an interested party, which could cap the upside for our investors at this point.
It is definitely a very interesting project, but there's so many threads to pull there. But I guess we'll have to leave that for another time. I would like to take the viewers north towards your other project here on this map, also a different state, Idaho. Perhaps you can take us along. What is your second project all about? What is there currently? What do you plan to do to it?
Well, the first thing to point out, and you're showing it on this slide here, Stang, is that there's a lot of synergy around these operations in terms of our people, our expertise, and the type of mining that we're talking about. These are neighboring states in the United States. Idaho is a very progressive state for the policy improvements that we're seeing broadly across the United States right now. In fact, Idaho's just come out with the SPEED Act, which will accelerate the pace of permitting in the state of Idaho. Our project, Beartrack Arnett, was assembled over a period of 7 years. Another large land position, some 6,200 hectares. We are about an hour's drive from a town of 3,000 people, which means that there's no requirement to have a camp to facilitate operations. And we've got a mineral endowment of now 4.6 million ounces on this project, so quite large. Discovery cost to date of just under $6 an ounce of gold. If you have one of the other slides that you can show our land position there, Stang, I'll continue on to point out that this is a property with about a 5-kilometer trend of existing mineralization shown on that main northeast southwest trend. It's an orogenic gold system. These can be very large. We've got another 5 kilometers of trend to the south, and that is all exploration potential as well as at depth. We've hit with every drill hole into this project. It's really exciting from an exploration point of view for long-term potential to grow out to a large mill operation. In the immediate term, what we're doing besides continue to explore and discover more gold is we're working on the first phase of this project to reutilize existing infrastructure and to restart heap leach production from the site. So again, going back to Revival Gold's unique characteristics, we are focused on brownfield sites. I spoke about that with respect to our Mercur project in Utah, but also our project in Idaho has the benefit of an existing power line to site, roads to site, buildings, and also a ADR gold processing facility. So our intentions in the first instance here, as we've developed along for phase one, is to move towards a restart of production from this site. We're already at a preliminary feasibility stage here, and we're already in permitting preparations while we continue exploration along that big trend of mineralization I pointed out earlier.
Great overview and definitely great potential there. Also very interesting to see that previous infrastructure here is a great picture in your presentation to show that facility there. Of course, like you said, you have done a PFS in the past. There's some interesting results there. Here we see 4.6 million ounces across the different categories at pretty darn good grades. Also, relatively modest CapExes compared to a really high MPV at spot prices. And perhaps you can take us along what the rationale is regarding this pre-production CapEx for the viewers at home of about $109 million. How should we view that for a $60 million company on the stock market? What are the options available to you?
Yeah, there's some really interesting alternatives. Because we're based in the United States, we can access bank, corporate, and project finance on something like this. It's low geopolitical risk, and there are a lot of parties looking for this kind of investment. I would say $100 million of capital is not very large to slice up from a funding point of view. There are other avenues besides bank debt. Of course, there's private equity, there's streamers and royalty providers, all of whom have an interest in this project. We haven't done any of that yet. We've preserved that for the construction decision. We are about 3.5 years away from being able to turn a shovel on this project, so a little bit longer than our Mercur project. And the principal reason for that, although this is a brownfield site, and although it's really just a restart of the past operation, 12,000 tons a day, approximately 65,000 ounces a year of gold, we will have to go through federal permitting process with the United States, and that just takes longer than our private property in Utah. So we're marching along that path. The funding, I think, will come into play quite easily in the end. We can lease equipment, we can borrow money, and of course we have access to a lot more equity capital from our institutional shareholder base, which is about 40% of our ownership right now. Some very sophisticated, large institutions. This project benefits from being close to a town, so no requirement for a camp. And if you look at that IRR at 34% on $2,000 gold, it's a pretty compelling project.
Pretty compelling indeed. And if I do some, thank you by the way for the overview on the funding, but if I do some quick napkin maths, 65,000 ounces a year over 8 years spread out, that's about 500,000 ounces, while you have 4.1 million ounces across the different categories. Perhaps you can take us through what is currently included in this PFS and what is actually still not included and therefore potential upside, let's call it, for a potential investor.
Thank you for bringing that up. Of course, our PFS is focused on the heap leach component of the resource. And as I mentioned earlier, we have a second phase to go underground and pursue mill material. That is material that's higher grade and that will require a mill to process and produce concentrates or gold for sale. The heap leach component of the resource is about 1.1 million ounces of that 4.6. That leaves us another 3.5 million ounces of upside, and we don't even have to drill it. It's already there. So we are working away, of course, on that potential as a next phase of operation. And if you think about the sequencing of Revival Gold's portfolio of projects, we've got Mercur in Utah first in line, some 80 to possibly as much as 100,000 ounces a year from that project. And then we'll go into the heap leach phase at Beartrack Arnett in Idaho with some plus or minus 65,000 ounces a year from that project. That takes us up to about 150,000 ounces a year gold production from heap leach assets. So these are the relatively straightforward open pit heap leach processing scenarios. Beyond that, we'll go into that sulfide potential at Beartrack Arnett and a mill operation, and we think we can see ourselves upwards north of 250,000, perhaps as much as 300,000 ounces a year of gold production. All this from the existing portfolio, all of this from organic growth, and really being in the United States with these assets, long life potential. It's a very attractive geopolitical situation for our investors.
You could say that again, definitely. If I quickly again, thank you for that. If I quickly look at your PFS, I believe that was done in, if I'm correct, 2023. How should we expect prices to have evolved over time with inflation, especially in mining? Should we expect a larger figure by the time this mine is actually built, or how should we view that capex figure?
The main aspect of cost inflation in projects, and particularly as they move from a PEA stage through PFS to FS and construction, is around the unknowns from a technical point of view. So for example, when the engineers do work on geotechnical aspects to understand where roads can go, where foundations can go, how much material needs to be excavated, or when they're doing work to figure out strip ratios, angles of repose for heap leach pads, waste pads, and even for the pit slopes, these things can change if you don't have a lot of technical data, or even as you're evolving your technical data. So the benefit of being on a brownfield site like ours is that we know these factors, these technical factors. We have 30 years of baseline data, a past 10 years of production and operation, of course the construction, and the plant already in place. So it's not like we're trying to find a new location to put the plant. We already know where the foundation is going to go. We know where the roads are going to go, and we know what material was required to build those roads. They're already done. So that saves us a lot of risk for capital cost inflation. In fact, most of the CapEx associated with the restart of this operation is refurbishment of the existing plant and the mobile equipment, crusher and trucks and so on. So these things are not subject to a lot of price risk. They're not subject to a lot of cost inflation, and that makes our 110 some odd million of CapEx associated with this project from 2023 relatively immune to CapEx inflation. Now we're going to see some of that with labor, and we're going to see some of that with fuel, but what I would say is we don't have big components in there, and we don't expect a big run-up in costs associated with this project as we move to construction.
Thank you for that overview there, and I think this picture is very clear. What the people see on the screen right now, the production profile that you were outlining, of course timelines are a bit fuzzy, but this is truly the potential. First of it, mostly heap leach operations, very low capex compared to some of your peers, and then you have that substantial underground potential where a bit of a larger capex would be needed, but of course that would be after years of profits. And what I find very interesting in this story is that, for example, at Beartrack you have quite large areas still unexplored. So you have that upside of that heap leach operations, then you have the underground mine, and then after that you still have quite substantial exploration potential. Perhaps you can very shortly take us through what Beartrack would look like exploration potential-wise before we go talk about some of the more boring stuff like finances.
Yeah, the way to think about this project is much along the lines, and Europeans will know this operation, of Kittilä in Finland. Agnico Eagle started this mine within the first 500 meters of surface and over a strike length of about 2 or 3 kilometers, and has since grown it to about 5.5 kilometers, and now down about 2 kilometers in depth with the new shaft. And this is a lot along the lines of what we see happening at Beartrack Arnett. Very similar style of deposit, orogenic gold system, similar vertical orientation, open at depth, similar kinds of grade in the underground. And in fact, our material has a simpler process around it. We have 1 flotation circuit versus Kittilä's 2 flotation circuits, and it's simpler from a mining point of view because we have 1 major core of high-grade mineralization in the deposit, not several, and so that makes for easier mining. And so the exploration potential here is outstanding. At depth, the deposit's open. To the north, the deposit's open. And to the south, we've outlined over 5 kilometers of strike, and our geologists are itching to get back in and do some drilling here. Of course, we've got to balance that against spending shares from our capital base right now, but the potential in this deposit is really outstanding, and we've got a solid business case for more exploration.
And I understand that balancing act, on the one side you already have substantial resources in place and it's all about developing that and actually generating some cash flows, but on the other hand there's so much low-hanging fruit you want to explore. Tough balancing act for sure. Perhaps we can quickly touch on finances. I believe you've done a capital raise in May 2024 for about 7 million. Canadian dollars back then. What is the current financial situation of Revival Gold? How should we view that?
Yeah, so we ended the last quarter with about $1 million of cash, and we're working towards the completion of that PEA with respect to Mercur. We think that's an important milestone here. We are watching the markets very closely. Gold is doing very well, over $2,800 an ounce. In fact, over the 6 years or so that 6 or 7 years that we've been developing Revival Gold from nothing to now 2 projects, 6.2 million ounces, economic studies, and the team, of course, pulled together. The gold price has gone up some 3-fold, and so this has been hugely advantageous for these projects. And of course, bring jobs back, bring domestic mineral production back, and improve on regulations. So all of this bodes really well for these projects. And as we think about our funding, I think the possibilities and the opportunities are growing here. We've got a solid gold price. The outlook's looking very good for the rest of the year. We've got a very favorable U.S. Administration for domestic mining and improvement in regulation. And of course, we've got milestones ahead here as we continue to grow out this portfolio. But we will be needing more capital, and it's just a matter of working the right balance here. And look, let's be honest, with such value and being a public company, we also need to be looking at strategic transactions, and that's something else we're looking at as we continue to grow out the company.
Yeah, great to hear you discuss and think about all those different options. And of course, the value proposition of Revival Gold is very clear. $6 per ounce in the ground, I believe, is what you referenced. Very, very interesting. Perhaps we can quickly touch base on 2025. We already referenced multiple things that will occur in this year, but perhaps you can outline how this year will look for Revival Gold from start to finish, and what the main catalysts are that we should be looking out for.
Well, the immediate catalyst is to look for the PEA, the permitting guidelines with respect to Mercur. I think once we've done that, we have the possibility to double our underlying NAV with that PEA. We're already at $170 million of NAV for $60 million of market cap. And if we can double that and take ourselves up to something in the order of $350 million of NPV, it's an even more compelling situation. Beyond that, I think we're going to want to march that Mercur project forward as quickly as we can. There are steps we're going to have to take in terms of the re-permitting of the site. Again, I mentioned that this is a resource that's on private ground, so we can work through the state agencies known as Department of Oil, Gas, and Mining in Utah, and we'll want to get going on that ASAP, I expect. The other thing we're going to want to do is some more drilling on that project. When you've got an economic deposit and some very low-hanging fruit, I think you used that term earlier, around the edges of the resource, you want to get back in there and drill those while you're progressing the permitting and before you turn the shovel on a mine plan. So we'll want to be doing some of that. And of course, at Beartrack Arnett, we have baseline study work that we'd like to kick off. And if we have our way here, we're going to want to go in and continue to expand the underground potential with more drilling there. So it's looking like a very busy 2025. Of course, we want to see those PEA results come out from Mercur before we start launching on full-scale plans. And I'd love to come back and speak with you in early April about those plans.
That sounds great. I think we have a great overview of 2025, plenty of catalysts on the horizon. Thank you so much for your time. I really appreciate it.
You bet, Stang. Thanks for having me.